Hello, everyone. Welcome to the market opening bell on Tuesday, April 15. The Trump administration has excluded smartphones, computers, and other electronic products from reciprocal tariffs, but later clarified that this exclusion is temporary. Semiconductors, smartphones, computers, and electronic products will face separate tariff treatments. Hong Kong stocks rose on Monday, tracking global markets. The Hang Seng Index opened 449 points higher, peaked at 21,517 with a 602-point gain, and closed up 502 points or 2.4% at 21,417, marking its fifth consecutive day of gains, a cumulative rise of 1,589 points or 8%. The H-share index rose 164 points or 2.1% to 7,965, while the Hang Seng Tech Index gained 114 points or 2.3% to 5,015. Total market turnover reached 253.3 billion Hong Kong dollars, with southbound funds recording a net inflow of 5.78 billion Hong Kong dollars. Technical analysis, the Hang Seng Index broke above the 100-day moving average, reaching a high of 21,517, close to the one-third retracement target of 21,580, fulfilling last Monday's downside gap, which is 1,590 points wide between 22,638 and 21,048. A half gap fill would take the index to 21,840. Besides gap analysis, Fibonacci retracement can also predict rebound targets. The recent decline from the March 19 high of 24,874 to 19,260 was 5,614 points. A 38.2% retracement gives a target of 21,400, achieved Monday. A 50% or 61.8% retracement would target 22,070 and 22,730 respectively. Mainland Chinese markets closed higher with lower volume. The Shanghai Composite Index rose 24 points or 0.8% to 3,262. The Shenzhen Component Index gained 50 points or 0.5% to 9,884. Combined turnover in Shanghai and Shenzhen was 1.2774 trillion yuan, down 172.7 billion yuan from the previous day. The renminbi central parity rate was set at 7.211 to $1, down 23 pips from last Friday's close, hitting a 19-month low. China's General Administration of Customs released the latest trade data. In Q1, total imports and exports reached 1.43 trillion dollars, up 1.3% year on year, reversing the decline from Q1 2024. March trade total 569.5 billion dollars, up 8.1% year on year, beating the expected 5.2% growth. Q1 growth was 6.9%, far exceeding the forecasted 4.5%. March exports surged 12.4% year on year, above the expected 4.6% and prior 2.3% for January-February combined, marking the highest monthly gain since 2023. Q1 imports fell 6% year on year, below the expected -2%. March imports dropped 4.3%, an improvement from January-February's 8.4% decline, but below the expected 2.1% rise. The strong March export growth reflects companies front-loading exports before tariff hikes, pushing the trade surplus to a near record high. However, the 4.3% import decline signals weak domestic demand, particularly for energy and commodities. In Hong Kong, Xiaomi bucked the trend, closing at 443.2 Hong Kong dollars, down 1.05 Hong Kong dollars or 2.4%. Reports indicate Xiaomi delayed the launch of its latest electric vehicle, YU7, 15 Pro smartphone and AI glasses originally set for Thursday, April 17, following a fatal accident involving its SU7 electric car 2 weeks ago. Additionally, Xiaomi postponed its investor day from this month to June and cancelled its annual Mi Fan festival on its founding anniversary April 6. US markets, the Dow Jones Industrial Average rose as much as 565 points to a high of 40,778, closing up 312 points at 40,524. The S&P 500 climbed up to 1.8% to a high of 5,459, ending the day up 0.8% at 5,405. The Nasdaq Composite surged as much as 2.5% to 17,136, closing up 0.6% at 16,831. The Nasdaq Golden Dragon China Index, reflecting Chinese ADRs, gained 270 points or 3.2%, closing at 6,726. President Trump announced that semiconductor tariff rates will be disclosed this week, noting that some companies will have flexible arrangements. With Good Friday as a holiday, the announcement is expected before the holiday. This news tempered the rebound in tech stocks. Apple stock rose as much as 7.5% to 212.94 US dollars, but closed up 2.2% at 202.52 US dollars. Nvidia climbed up to 3% but ended down 0.2%. Nvidia stated it plans to build 500 billion US dollar worth of AI infrastructure in the US over the next 4 years through partnerships with companies like TSMC. TSMC has begun producing next generation chips at its Phoenix, Arizona factory. This week's focus beyond tariff news includes tomorrow's March retail sales data, speeches from multiple Federal Reserve officials, and blue chip quarterly earnings. Major companies like Goldman Sachs, Bank of America, Citigroup, Johnson and Johnson, TSMC, and Netflix will report last quarter's results. Goldman Sachs announced a 15% year-on-year increase in Q1 net profits to 4.74 billion US dollars, with earnings per share of $14.12, beating market expectations of $12.35. Revenue rose 6% to 15.06 billion US dollars, also exceeding forecasts, lifting its stock nearly 2%. Due to Trump's tariff policies, OPEC lowered its demand growth forecast, projecting crude oil demand to grow by 1.3 million barrels per day this year and next, down by about 150,000 barrels from prior estimates. Oil prices closed largely unchanged. Our stock pick today is Tongcheng Travel, stock code 780. In 2024, Tongcheng Travel expanded its user base to a new high, achieving record-breaking business volume and revenue. This was primarily driven by continuous efforts to enhance products and services, explore new markets, and actively increase the platform's user value. Additionally, the company made significant progress in expanding its outbound travel business. Through effective customer acquisition and engagement initiatives, the group not only built a substantial user base, but also enhanced user value. For the 3 months ending December 31st, 2024, average monthly paying users grew by 9.3% year-on-year to 41 million. On an annual basis, monthly paying users increased by 4.4% to 43.1 million, while annual paying users rose by 1.5% to 238 million, reaching an all-time high. Driven by sustained increases in user purchase frequency, cumulative service transactions over the past 12 months grew by 9.3% to 1.93 billion. In the fourth quarter of 2024, the group's total revenue rose by 34.8% year-on-year to 4.237 billion yuan, with adjusted net profit increasing by 36.8% to 660 million yuan, achieving an adjusted net profit margin of 15.6%. For the full year of 2024, total revenue reached 17.34 billion yuan, up 45.8%, while adjusted net profit grew by 26.7% to 2.785 billion yuan, also hitting a record high with an adjusted net profit margin of 16.1%. Looking ahead, the Chinese government has introduced a series of supportive policies to expand the supply of tourism products and enrich consumer experiences. The group will continue to focus on enhancing its products and services, delivering greater value to users, and prioritizing the expansion of its outbound business to seize emerging opportunities and broaden its global presence. Recommendation: buy at 21.5 Hong Kong dollars, target $24, stop loss at $20. I personally do not hold the above stock.